Good morning, I'm Andrew Topf with Investing News Network, and I'm here at PDAC with Mickey Fulp. Mickey runs the Mercenary Geologist website and is a frequent commentator at these shows. Thanks for being here, Mickey.
Well, thanks, Andrew.
So I want to start by asking you about copper. You gave a presentation where you said that you remain a long-term copper bull despite the metal being pretty range-bound lately. So then there's also the slowdown in China to contend with on the demand side. So why are you still bullish on copper?
Well, I'm a long-term secular bull on copper, basically because when you really get down to it, 25% of the world's population, that's 1.75 billion people, can't turn on a light switch. They live in the dark. So you need copper to transmit electricity. So the demand is coming from countries that are emerging markets moving into a society that will have a big middle class component. So the demand is there. China, although it slowed down, in my opinion, well, we know it wasn't a hard landing. In my opinion, it wasn't even a soft landing. They just put some policies in place to slow the economy down, but China's still doing very well. So China, India, the BRICS, Brazil, India, Indonesia, China are going to drive copper demand for the foreseeable future.
Okay. Another point you make is that we're using a lot more copper than we're mining. So where are new copper mines going to be built?
Well, that's a big problem. We are increasingly having difficulty finding good deposits, and there are geopolitical risks that have prevented the two best deposits have been discovered over the last 15, 20 years from being developed. So we need to find more giant high-grade copper deposits there. Where those are going to come from, I'm not really sure. I do have a favorite copper company in the space, though.
You're a fan of in situ copper mining, are you not?
Well, I am, and so Curious Resources, a Hunter Dickinson company, is very close to construction and development of an in situ recovery copper project in the Porphyry Belt of southeast Arizona.
Okay. And you have the same concerns about uranium supply in that a lot of jurisdictions that mine uranium are either too costly, they're too small, or they have problems politically. So where are we going to find new uranium?
Well, that's a good question, too, and we are finding new uranium deposits in the Athabasca, and we're developing new ISR deposits in the western U.S. So those would be my two favorite jurisdictions. I'm willing in uranium space to take any geopolitical risk, so I tend to stay in North America with the companies I'm interested in and also in past producing districts.
And do you have any companies that you're following right now in uranium?
I do. I cover and hold Strathmore Minerals, which is a project developer in the space and holds two of the most robust uranium deposits in North America, which would be Roca Honda in the Grants Mineral Belt and the Gas Hills of Wyoming.
How about the Athabasca Basin?
I just recently, one of the stocks I held, Fission Energy, got taken out, and so I'm always looking for my next play in the Athabasca. I hold a couple of juniors, but they are not close to discovery at this point.
Okay. All right. So Mickey, a lot of companies, a lot of investors are disenchanted with junior mining stocks right now. That's probably an understatement. You can see that with lower attendance at PDAC. So okay. Do you see any reason for optimism in the near term?
I'm a geologist, so I'm kind of always a glass half full sort of guy. So I'm optimistic about the space because of the carnage that's going to come about here. So a bunch of bad companies that need to go away are going to get washed out over the next couple of years, and I think we'll end up with once this bear market is over, and bear markets always get over just like bull markets do. So once that we are out of this bear market, we'll come in with a leaner, cleaner, meaner junior resource sector, and I think that's healthy for our business.
Yeah, okay. The last time I talked to you last year at PDAC, you were bullish on graphite. But since then, a lot of these graphite juniors have been punished in the market. So are you still interested in the sector?
Well, I very much am interested in graphite. It was probably one of the shortest-lived commodity price bubbles we've seen. Price basically went parabolic. Now, it's still much higher than where it started to run up. For flake graphite, we're probably looking at $1,500 a ton in quantity, and last year at this time that would have been $1,800 to $2,000 a ton. But there is room outside of China for good flake graphite companies, and it's much the same. It's a very small market, so it looks to me like there's room for about 100,000 tons of flake graphite production. So it's one of these first-in production, sort of first 2 or 3 companies in production, I think, will be the ones that succeed, and that assumes, of course, that they have good deposits.
And you mentioned that high grade is important in graphite.
It is.
Do you have any companies you're following right now?
Yeah, I am a very early on shareholder of Flinders Resources, and I remain a committed shareholder of that company. They are building a new mill or refurbishing a mill, redesigning a new mill for a past producing graphite deposit in Sweden that runs plus or minus 10%.
Okay. So we've seen a huge rebound in the stock markets this year. Equities are returning to favor, and this has been bearish for gold. Do you think that the blip in gold, the reduction in the price in gold is just a blip, or will it keep rising this year?
Well, I'm stated on record. I think the gold will end the year higher than it started the year, but that's happened for 12 years in a row, so it's probably a pretty safe bet because of the constant devaluation of fiat currencies worldwide. It's a race to devalue the euro, the U.S. dollar, the yen. Pick a currency that is not in a race to devalue. So in terms of nominal price of gold, that's bullish for gold. Gold at this point is down for the year, but it hasn't even gone down enough to constitute a market correction, which is a 10 to 30% drop in the price. So what I've noticed is every time it goes below 1,600, it looks like it bounces off of 1,550, and we've seen that recently. Today it's trading something 1,585 or something like that. So I'm not particularly bearish on gold, but I think once again it's going to be range bound.
Okay. There's been some talk recently of silver being undervalued compared to gold. So would you agree that there's an increase in the spot price of silver coming?
No, absolutely not. I look at the gold-silver ratio, and I look at historic trends in that. You know, I'm a proponent of buying physical bullion, holding it in your physical possession. Last time I bought silver, the gold-silver ratio was 80, and it's about 55 right now. So I do not buy the idea that silver is undervalued with respect to gold.
Okay. Mickey, thanks for speaking with me. It's always a pleasure getting your insights. I've been Andrew Topf for Investing News Network. Thanks for joining me.